Hey everyone, so today we're going to dig into a really fundamental shift happening in the world of finance, a force that's moving literally trillions of dollars around the globe. We're talking about ESG bonds. We're going to break down what they are, how they work, and tackle the big question, are they really changing the world?
But let's start with something a little more personal. Think about it. Can the money you save, the money you invest, actually be used to build a better world? It's a pretty powerful idea, right? The thought of connecting a financial decision to a real, tangible, positive outcome. And that question, well, it's right at the heart of everything we're talking about today.
So what in the world is an ESG bond? I know, the term might sound like some complex Wall Street jargon, but honestly, the core ideas are surprisingly simple. To really get it, we just need to break down two key building blocks. Let's start with the absolute basics. Okay, first things first. What even is a bond? Well, the easiest way to think about it is as a formal IOU. That's it. When you buy a bond, you're basically lending money to an organization, maybe a big company or even the government. And in return for that loan, they promise to pay you back in full with interest over a set amount of time. It's a fundamental tool of finance, plain and simple.
All right, now for the second piece of the puzzle, ESG. You've probably seen this acronym popping up everywhere. Think of it like a report card for a company, but instead of grades, it's scoring them on sustainability and their ethical impact. E is for environmental. How does the company treat the planet? S is for social. How does it treat its people, its customers, and the communities around it? And G is for governance. Basically, how is the company run? Is it transparent? Is it accountable?
Okay, so let's put those two pieces together. You take a standard bond, that IOU we talked about, and you layer on that ESG framework. And what do you get? An ESG bond. It's a loan where the money being raised is specifically, and I mean specifically, earmarked for projects that have a positive environmental or social goal. The key word here, the thing that makes all the difference, is the purpose of the money.
But here's the thing. ESG isn't just a one-size-fits-all kind of label. It's more like a toolkit. It's got different types of bonds designed for very different jobs. Let's take a quick look at the main flavors you'll come across.
Now, this is where it gets really interesting, because you can see how specific these tools are. First up, you have green bonds. These are the most common, and they are laser-focused on environmental projects, like, say, building a brand new wind farm. Then you've got social bonds, which are all about people and community. Think financing more affordable housing. Sustainability bonds are kind of a hybrid, funding projects that check both the environmental and social boxes, like creating a sustainable water management system. And then there's this last one, sustainability-linked bonds. Now, these are a whole different ballgame. Instead of funding one specific project, they're tied to the company's overall performance on huge goals, like a promise to slash their total carbon emissions by a certain year.
And if you're thinking this is just some niche corner of the market, well, think again. The global sustainable debt market, which includes all these different bonds, has absolutely exploded. We're talking more than $3 trillion. It's a staggering amount of money. But it also raises a huge question. Is all that cash actually doing what it's supposed to do? And this brings us right to the heart of the debate. Because for all of its incredible promise, there's a very healthy dose of skepticism out there. Is this whole trend creating real, measurable change? Or is it sometimes just a really clever PR move? Let's break down both sides of the argument.
So first, let's look at the promise, because the arguments for these bonds are really powerful. At its core, the idea is to channel massive amounts of private money directly into critical projects that governments just can't fund on their own. It also forces a whole new level of transparency, because companies have to actually report on how the money is being used. And for investors, it's a game changer. It lets you finally align your financial portfolio with your personal values. You can see the real power here. It's using the market itself to push entire companies to think more sustainably.
But on the other hand, there are some pretty significant pitfalls. The biggest criticism you'll always hear is greenwashing. That's when the environmental claims a company makes are vague or exaggerated or just plain misleading. And this is made a lot easier by the fact that there's no single global standard for reporting, which makes it tough to compare apples to apples. This leads to another huge problem. It can be incredibly difficult to measure the actual real-world impact. Is a project truly making a difference, or is a company just funding something it was going to do anyway and then slapping a green label on it to get some good press? So, after all that, where does this leave us? Is this just a passing fad, or are we actually witnessing a fundamental rewiring of how our financial system works? Let's zoom out for a second and think about what this trend really means for all of us. This quote really hits the nail on the head. The philosophy driving all this isn't just about feeling good. It's a cold, hard financial argument. The core belief is that companies that manage their environmental risks, that treat their people well, and that are governed ethically are simply better, more resilient, and ultimately more profitable businesses in the long run. ESG isn't seen as charity. It's seen as a sign of smart, forward-thinking management.
And that leaves us with one last fascinating thought to chew on. You know, for centuries, the idea of doing good for society and doing well in business were often seen as two totally separate things, sometimes even as enemies. What we're seeing with the rise of ESG bonds is a massive, multi-trillion-dollar experiment to see if we can merge them. So the real question for all of us, as investors, as consumers, as citizens, is this: is doing good becoming the new frontier for doing well?